This is Craig Haugard with your Financial Issues Ag Update. The corn futures made new multi-month highs yesterday before encountering profit-taking by funds, which pushed the corn to a lower close. Funds were estimated to be sellers of 4,000 contracts yesterday, which still leaves them long 234,000. We've been keeping a close eye on the weather situation in South America. In the last couple of days, we've seen that improve dramatically. Rains in Brazil and Argentina the last few days have turned out to be better than predicted. We have considerable rain still forecast for Brazil in the 5-day outlook, while in Argentina, the rains that accumulated in the past few days have cut the average rain deficit for the corn and soybean area in that nation by 80%. Obviously, the weather continues to include moisture. It'll keep some pressure on corn prices. Futures in the soybean market posted their first lower close in 7 sessions. We had better than expected rains in South America, coupled with a lack of new export sales, which resulted in profit-taking yesterday. In the past couple of updates, we've discussed the difference between a timely planted South American crop, which leaves the U.S. supply and demand picture in a very comfortable situation, and a late planted crop, which pushes more Chinese business to our shores, and in turn results in a tight supply and balance sheet and some rationing. With that in mind, it's interesting to see yesterday's planted progress, which puts the Brazilian crop at 23% planted. Now, that's down from 32% at this point a year ago, and the 5-year average, which is 34% of the crop planted by this date. Winter wheat received its first good to excellent rating this week. The trade was looking for it to be rated at 52% good to excellent, but instead we're given a rating of only 41% good to excellent. Now, in spite of that, the wheat markets closed lower yesterday as they fell prey to an improving weather models. In Europe, we saw much the same story, where Paris milling wheat prices saw pressure from improving conditions in Russia and jitters over the rapid increase in virus cases around the globe. Cotton futures had a pretty sideways session yesterday. The December futures traded higher before closing down 8 points, settling at 72.03. Livestock futures turned in a mixed session. We had the December live cattle futures ending the day 65 cents higher, while November feeder cattle were $1.72.5 higher at the closing bell. Lean hog futures, on the other hand, gave up a little ground, with the December futures a dime lower at the close. Class 3 milk futures retreated and filled the gap that had left on Monday's trade. At the closing bell, we had November futures 39 points lower as they closed at 22.37. And meat cutout values were mixed. Choice box beef was $1.13 lower, closing at 206.70, while select boxes were 18 cents higher as they settled at 188.67. Pork carcass cutout values had another pretty rough day as they dropped $3.03 to close at $88.83 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.